Good afternoon, guys, and welcome to a special leadership series. We don't do these very often, as you know. I don't like to annoy you too many times in 1 week, but when there's a special occasion for the leaders only, we roll these ones out. So today we've got the amazing KMint joining us, who, you know, if finance was for agencies a kung fu skill, and Kathryn will have a black belt in this. She recently led and I believe MC'd as well as had a session there in Singapore for the Network One's Indie Summit. And we've invited her on today to talk about a little bit of a health check for our agencies to make sure where everything's in line, to make sure that everything's kind of set up. And feel free to ask questions during the way, put things into the chat feature, just yell out, raise your hand. But it's a great way to just make sure we're all healthy in the right place. So she's going to put on her rubber gloves and give us a physical on making sure we're all financially. It's a horrible metaphor. I apologize. But
yeah,
we're all healthy financially. And without further ado, before I embarrass myself anymore, I'll head over to Kathryn. Over to you.
Thank you, Sam. It's true. I actually was in Singapore with the Network One, our brothers and sisters across the waterways, run by Julian Balding in the UK, who heads up the Network One. Fantastic global event with indie agencies only, and they had over 120 agencies at that event. There were 3 agencies from Australia, and 2 of them were IMAA members. So I would hope that next year, every second year they do this event, the Global Indie Summit in the UK, and every alternate year they pick another destination. So this year it was Singapore, and the first year after COVID. So it was a really great session. I was invited to be the MC for the event, which the 2-day event was quite extraordinary. From I do MC work and I keynote speak inside agencies and for the industry bodies like IMAA. But to be the MC was quite unique because I'm a CFO. So who has a CFO as the MC? We decided it was a really relevant role for me because all roads lead to finance. And you as business owners will know that. You never really abdicate responsibility for running the agency, and money is a topic we need to get very comfortable with. So do our people. So for the summit, it was pretty awesome to be that role and introduce 24 speakers over the few days and make sure that there's an action out of every keynote, which is again what I will do for you today. So I'm conscious of the time and the audience and what we need to do at this point in time. So we're halfway through June and most of us are on a 30 June year end. So I've just come out of a board meeting with one of the many agencies I work with across Australia, running the May results, the final quarter, Q4 results. 30 June forecast, what are we looking at? And also budgeting for FY24. What does it look like for the whole year? Targets, quarterly and monthly. By now, you should all have a pretty good grip on that. And if you don't, then hopefully today you'll get some pen on paper, type some notes. As Sam said, if you have questions throughout, type them in the chat. Now, I can't see the chat because I'm presenting, but Tian can see them and he will interrupt me and say, Kathryn, there's a question. So don't be shy, ask when the topic hits you and you think, I just need a bit more, or you can wait to the end. Or if you think about it after the session, then that's absolutely fine. Ping the question through. They're very happy to help. So I've worked in the industry for 30 odd years. I think quite a few of you will already cross paths with me at some of my keynotes. They're all called Show Me the Money, which I own the IP trademark for that across Australia. Under that as a main heading, and today Show Me the Money is going to be about our monthly KPIs and looking at the end of year financial check. So I'll just move to the next slide. So we want to look at stakeholders today. So back to what I said before about who's in the room. You may have brought your finance people along to this meeting as well. Their requirements on the end of year financial health check are different to yours, although they will support yours as the owner of the business. Then again, if you're in the middle as a client lead or a general manager, your metrics and your targets might be a little different as well. So the first thing I wanted to just set the scene on, well, who are we talking to when we look at that end of year health check? Now, I'm conscious that it is end of year financial year health check, but this is something I do with all of the agencies I work with, and I'm working with about 10 at any one time. you do it every month. So by the time you get to the end of the year, like now, you already know. It's not a surprise. It should not be a surprise. So if you see stuff in the presentation today that you like, then let's see if we can embed it in your agency as well. So you see everything every week, every month, every quarter. Don't leave it to the end of the year because it's a little too late. And you need to be looking back, sure, but you need really to be looking forward. So everything again is positioned so that we're looking forward. So whilst we're looking at key metrics, we want to know what the business drivers are for your business forward and what's the CTA, the call to action. So let's start on who we're talking to. Our focus today is going to be looking at the CEO. You're the leader. You are the tone at the top. You are the one that sets that direction. So being really clear on what you're doing for the year ahead, it's your job to know that. Your account directors or your general managers, the client leads are in the middle. They're all about performance. They have to make sure that they perform to those targets to hit that vision, that clarity that you set for the beginning of this year ahead. And maybe it's more than a year ahead. Maybe you're on a 3-year trajectory. Maybe you've got a 5-year plan. Whatever that plan is, you need to share that with those middle people because every day they're working towards that goal. Clarity is important here. So most businesses I work with, the CEO will be saying the overarching goal for FY24 is, and you need to be able to say what that is in one sentence or one word. So at the moment, I'm consistently hearing doubling ourselves from what we were last year. We're going to double again. Or it might be we're growing 20%, or we're diversifying into other revenue streams. So whatever that is, or we're just buckling down and holding steady. So whatever it is, be clear on it. Make sure your team know what it is. And our third stakeholder is our finance team. Now, as indie agencies, you may not have a permanent CFO on board. You might have a full-time bookkeeper or management accountant, or maybe you're slightly larger and you have a bookkeeper and a finance controller. You will definitely have your external tax accountants, or you might even have external bookkeepers and really no one fulfilling that CFO role, in which case some of the work that you'll look at shortly on this deck, you might not have. So that's something, again, if you need it, if you want it, then you may put it into your budget. It's something you need to account for that you would like. So let's start off by looking at our leader. What are the key metrics that you want to see for your growth from the leadership leading the business, the CEO focus, MDs? Now, I know this is also relevant to the finance. So even though I'm talking CEO, leader of the agency, also any finance on the call, this is for you as well. The P&L tells you how you performed. It's like your number one. Of course, we're looking at that every single week, month, and top line, particularly on our billings and revenue. I want to look at the bottom line as well. I always want to look at my profit, of course, and depending on whether your margins are focused on growth or maintaining a steady profit. So some agencies I work with will not compromise the profit line, and they will do everything in their power to make sure that profit is maintained and preserved. So if you're looking at revenue margins on the different types, that might be what your focus is. So knowing what you're playing with, top and bottom, and margin targets, clarity around that. Then there is some next level performance as well, which we'll talk about on some of the coming slides. So visualizing at the MD, CEO level, just show me. Don't give me all those graphs and grids of figures and numbers. Of course, that will be there, but I might like to look back to 2020 and then see what's happening in a trajectory. Your graph might not be a steady growth like this, but you will be looking at, what was the budget for last year, and then what are we actually doing for this year? Maybe it's ahead, maybe it's below, and then what's the draft budget for the year ahead, and tracking a trajectory. Perhaps you also want to look at your revenue. So you're seeing those as two different things. They should track the same way. There might be some timing differences as to when your external vendor or supply costs hit and when you recognise. So again, conscious of the audience here, some of you will be simply working in Excel using Harvest or Workflow Max, which is about to be disbanded, in Xero or MYOB. Others will be using full service suites, the ERP systems, which could be Accountability, Job Bag, Pegasus, Paprika, or anything else. So these graphs should be easily created, but if you might have them in a package or you might not. I would want to look at the split as well about what am I spending my money on, which is mostly going to be my people, my running costs, and my profit before interest or after. So depending on how focused you are on the numbers here and seeing if it is the growth that I anticipate. There is a sweet spot in most agencies where you actually don't need to put on as many more people, full-time equivalents, to generate more, because you're automating, you're using an ERP system by then, and you become very efficient on your productivity. So net profit margin might be something you'd also track, so looking at percentages rather than dollars. So having some sort of a graphical dashboard on a monthly basis, this is annual figures, but you could see it quarterly and month by month as well, could be pretty handy, just so you can spot quite quickly if something's not flagging in the right direction. This is what would lay behind and is something that I would expect you to have now. So you have prior year for context for where we might be. You'll have budget that we had for this year that we're currently in, and you might have your actuals halfway through the month of June or finished at 31 May. Seeing what the growth is, actual to budget and actual to prior year, looking at targets. So already building for next year, you probably already have an indication of we want to grow. That might be your mandate. We want to grow 20%. So you'll make the figures work from the top down. Or you start from the bottom saying, I want to achieve a 16%. That's probably not where it's at, because I can see profit in the previous years has been 22, 22, 22. So this is the top down by the looks, just for illustrative purposes. So you can start to play with the figures. What if I made my profit 20%? What would it do to my top line? Is that even possible? What is the growth that I need to achieve on a monthly basis? What's in my pipeline? Can I do this? And have a stretch. So what if I did increase it? Again, I'm looking at top line here, but I could look at bottom line. So building it the way you think to make sure that your graphs and your targets at the beginning of the year are clear and that you're comfortable with them. Working with agencies, it's no mistake that they hit their target at the end of the year when they work this way, because by osmosis or by clarity more than anything, you're looking at it every week, every month on pipeline, and your team should be looking at it too. So you're all aligned, you're all going in the right direction. You could see the gap and you know what to do to close the gap. So it's an active process for 365 days of the year, pretty much, but with these bullet points: weekly check-in on pipeline, monthly check-ins, and quarterly. So the balance sheet, we cannot forget that that exists. So in small business and indie business, if we're not looking at that, sometimes we miss some items. So if you're using an ERP, for example, how you recognise revenue on your P&L might mean that you've got quite a large amount of work in progress WIP sitting on a balance sheet account, which is waiting for the jobs to close, and then the remaining revenue will then touch your P&L. So getting a handle on what's in the work in progress account, if you're using an ERP, is pretty important. To know how much is ours, how much do we have to pay out to vendors and suppliers. And it is a constant, I guess, area of misunderstanding. That's just education for your people. Whichever system you're using, whichever bookkeeping company you're using, get some clarity around that work in progress. If you're not sure, it is complicated. So 30 June, some businesses who are not using a WIP process will just at the end of the financial year look at their P&L and decide, okay, well, some of those invoices we've raised relate to next financial year. So I could take that income out, and you'll do this with your tax accountant, and record it in next year, which shows you a lesser profit for this year, which means you're paying less tax. But if you're on a growth trajectory, you might want to leave it in this year. In fact, you might want to bring income that you're going to invoice next quarter in July or September forward to hit your growth targets for this year. If you do that, next year it's going to come out of your next year's income. So you actually need then to forecast more to cover that gap. Because when you back it out of next year, because you've already recognised it this year, your team will freak out. You know, what do you mean we hit our targets? So it's a little bit of a balancing act at this juncture as to what you show for tax purposes and stakeholders or potential sale, M&A conversations, and then what you actually show in your books. But the balance sheet will also have some other items that as an MD, CEO, you might be wanting to look at if there's any Div 7 implication, Div 7A for loans. And you might have some other areas in there that you just need to make sure you've got budget to cover those costs that are sitting there, liabilities, POIG, super, make sure you've paid all your quarterly. And we'll come to that a bit later for our other stakeholder, which is finance and their compliance requirements. Okay, so corporate liquidity is the balance sheet. Business valuation, also something you should be looking at as the owner. How much am I worth right now? This would be a calculation that could happen every month as well, and agency assets. What I mean here is having an automatic calculation that looks at your balance sheet accounts, picks it up every month in your end of month report that shows me how much working capital I have or free cash I have. Because remember, if we're running WIP, that's not all ours. Some of that is pledged, ring-fenced for vendors, particularly media. So really being clear on that. Quick ratio also would also be a useful tool, which looks at how much debtors have I got to pay my creditors. So if you're not running a proper debtor and creditor, so people who are using Xero and just doing spend money, you won't see very well on your quick ratio. You need that to be at least 1 time. So you've got enough debtors to cover once of your creditors. 2 times and above is better, where I've got 2 times the amount of debtors to cover my creditors. So that's quite important to these 2 little ratios. You'll just get used to seeing them every month and flag something when it's not working. Valuation comes from balance sheet and P&L. So there's many ways we can value an agency, but looking on the return on investment and potential pipeline, looking at the revenue, the extraction rates, contribution margin, EBIT percentages, they would be part of the valuation, and earnings per share. So looking at the balance sheet to calculate that to tell the business owner how much from my original $1 per share am I now worth. Assets come in tangible and intangible formats. Again, I might want to know that my clients are signed up, that I have staff signed up who are all professionally trained. Who are my supplier partners? What about my process and my intellectual property here? Trade secrets, making sure that you've got all of this battened down. So you know that you've got lists and it's all trade secret protected with copyright, trademark, and that you're recognising the value within your agency. If you ever do go to sale, this would need to be fully locked into a vault of all the, if you've done one of the Stephen Von Monster sessions with myself, you'll know how to manage this side of the business as well. Let's move to our middle manager. So our second tier, our second in charge, general manager, client leads. How do they help? They're all about performance. So their key metrics are much more around the clients, the team, and next level for them would probably be about pricing and growing revenue streams for you. So the client sort of matrices and visuals that I would have behind the pie charts, so the visuals always look great when you compare in context. So where were we last year compared to where are we this year? This client A, for example, there was a healthy pie last year. At the moment, client A has now taken over half of our billings, or it could be revenue. This is billings, because I've decided this is billings, but it might be different if you looked at revenue, because we keep all of that if we do the work internally. But if it's media, then probably 70% of that goes out the door. So just keeping a balance on a large client, because if you were to lose them, of course, you understand that has an impact on your business. I probably want to see this on a revenue basis as well, because maybe it's not such a large piece if that client A is mostly media. So you could do that and have a look at what the billings and revenue is per client, change it up a little bit. You need to figure out what you want to see that helps you as a leader or as a middle manager do something. What's the trigger that's going to make you look at doing something different? It's basically going to be new business at this stage, because it looks like this is starting to absorb my agency. It's a bit risky, but what is your risk tolerance? And to make them small again doesn't mean to reduce their spend with us. It means we need to find another client of equal spend or somewhat that squeezes them back into last year's kind of pie. So again, diversification might be something that you're looking at here as well, different sectors. As the second in charge client manager, I would probably have a list of all of my clients that I'm working with, and when are the contracts going to be renewed? Have I renewed them? Was there a rate increase? So if you're selling services as well, every agency that I'm working with at the moment, regardless of what discipline they are, most of us are multidiscipline. We might not do it all internally, we might outsource, but we're definitely looking at our rates, our charge out rates. So whether you believe in the hourly rate and billing that way or not, you still need to know what your widgets cost. Your widgets are your people. What do they cost per hour? And you should be tracking their time. If you're pure media, it might not be so important, but if you start to see that you're investing more time on one client as opposed to another, high touch or too many stakeholders, you might want to get a grip on exactly how much of my team's time is being allocated there, and am I recovering enough? So charge out rates and looking at those increased rate cards 1st of July, it's a process that a lot of businesses are going through at the moment. Look back multiple years if you haven't increased your rates for several years and apply the wage index. So not the CPI, but look at the wage index instead and see what it would look like if you had increased each year, and then that would be your starting place. You might also not do it by widget or person, you might do it by type of service. So that would be another matrix that you could do behind the scenes, and then applying it to the middle managers to help you work through that process. It might look like this as a visual again to say, all right, well, we've done 75% of our clients renewing and we've spoken to them about increases. Or scope of work has changed, so we're looking at different fixed prices. We're moving to retainer on some pieces and project with the others. So have a look at how you might do that and use some tools, like this is just simply Google Sheet using the little tick box, which I love, and a visual to show how you're progressing. And then each month work through it with your team to make sure they're helping you. You don't have to do it all yourself, but they're responsible for helping you drive the bus. What gets measured gets managed. So this is where you can KPI. So your middle managers, your second in charge, your GMs and client leads have people that report to them. So with a practical lens and working with them to set up a KPI scheme to help hit all the targets would be awesome. It's a great start to the year to have everybody aligned. So as an agency, we've done it already, but what about the individuals? How would you do that? Give them clarity with some core objectives. And how do we know if we've made it or not? Those are the indicators which we'd see on our dashboards through these visual graphs. And any flags or tick boxes are not met or they didn't have that meeting, you're really clear on what it is that they can do to make a difference. Keep it simple. So KISS principle, don't make it too complicated. Just if you don't have something in play but you'd like to get something started, then maybe it's just, well, this is last year's billings and revenue across your bundle of clients, your portfolio of, say, 5 clients, and next year's target, we've just allocated a percentage, and this is the growth we need from each of those clients. So keep it really simple and then help them to achieve that for you. Make sure they do the meetings with the clients, make sure they're asking the client for other sectors, introductions, get everybody to help you look at this. The reporting routine is critical. So don't skip a monthly meeting. Make sure you have your monthly meetings. Involve the team, not just finance giving you figures. Make sure that the team are also reporting up. So some of the more sophisticated agencies have got this in process already. Others who are not there yet, I think this is a really great step for your people to educate them to run mini businesses within the business, because they're producing the quotes and the estimates and the media plans. So they see all the figures, but they're kind of driving a little bit like this. It's like texting while driving almost, because they can't see the road properly. If you give them the pipeline, give them the access to their portfolio, then get them to report to you. And if you're KPI bonusing them, they can track their own bonus as they go. So if they're writing off or they're not hitting their targets or they're forgetting to do things that are on their KPI dashboard, they'll see it before you even see it. And so they'll action it before the meeting. Focus on the deliverables. And if they're unable to do it, it really comes down to training. It's not that they failed because they're useless. They're great people. We want them on our team. We just need to give them a bit more of what we know automatically. Like it's intuitive for us to think it this way or look at it that way or try this. So that's training. And rewards as well. It doesn't have to always be monetary. So it might just be that you deliver flowers to them. So you just work together as a team, that middle management, your second in charge leadership team, what would it take to actually hit our targets for the year ahead and help them to design something that will work for the whole agency. Pricing, as I mentioned, might be something, and some of you may have seen the money wheel, and this is the evolution from my money wheel. It looks similar. It's a wheel with spokes. This is the value pricing wheel, and it is what I presented in Singapore, which is where we move away from what we traditionally do and we look at other ways where we create value for our clients and how we harness what we do really well internally. So anyone who's working just on hourly rates and markup margins, commissions would sit here in these two. That's quite a normal position for all agencies across the world for decades. But moving into some areas of efficiency, when you've got a really slick process, then maybe you're going to start offering your client choice of other items they might not have bought packages and bundles, it's exactly the classic of, would you like fries with that? We need to do that too. Ask the client. There's a grid, you can see it visually, a little grid that shows all the services this agency offers with the clients at the top. What are they buying and what are they not buying? And if they are buying, what is client A spending on each of those services and what is client B spending? So again, it's a nice little tool to use as a SWOT, an annual SWOT process, which we should probably be doing, would have done it this last quarter, April, May and June, or you can do it in the first quarter of the new financial year. Just let's have a look, client by client, team by team, as to how we're going to grow with our existing clients if we see opportunity. There's definitely different pricing models that we can look at where we're doing content. Perhaps that can be by subscription, just as we pay subscriptions to other services like Monday.com or LinkedIn or Canva. So why are we not doing that? Even who gives a crap, toilet paper? Why are we not doing that? We can do that too. If they can do it, we can do it. Looking at the ROI and the value pricing piece is big. If you're delivering bigger results, and this is where I would look to my experience as an FE judge, what is it that makes an effective campaign? How do we use what the industry uses on our individual clients? Can our second in charge be looking at that so we can track it, create it with the client? If we're not already doing it, we should be doing it. Don't talk about how we do the work, talk about what we're doing for them and how it makes a difference. IP, again, creating intangible property for them. How do we value that? And that takes me up to licensing, royalties. Maybe we're not selling concept fees if we're actually involved in that production. Luxury pricing, and even taking equity in speculative pieces of new business as something exciting that maybe we feel as a business owner, we'd like to get into that space where we might have some great impact working with some environmental eco clients. But again, just to get your middle managers thinking about this can really change up how you do business, change your revenue patterns a little. So stick with what you know and then stretch. So looking at our last stakeholder today, our CFO. Under all, and I'm saying CFO as in finance department holistically, because I'm conscious that you may not have a full-time CFO on the call today. Whoever does your finance will probably love all the graphs because numbers are numbers and they're really good at numbers. But if they can create a little pivot table or create a little chart for you and have that as the reporting, they'll have all the answers in the data, obviously, but it actually raises the finance person as well. So giving them the education to grow, just as you would give professional training to the rest of your team, to be best in class, to be the best in the world, in the industry, what is it that they can do to really grow? They might want a pay rise too. So maybe there's some of this that they can stretch themselves to learn a little bit more about how they use the tools that you have available to them. If you're using an ERP system, maybe there's a piece in there that we haven't fully explored. And you might want to task them with learning that piece and then showing the rest of the agency how to use it effectively, or creating the monthly reporting process. So step them up a little bit too. But essentially the role of the finance team is the key metrics for them is just to make sure we've done everything that we have to do to hit that profit, show me the reports, and also have we paid all our bills and do we have cash in the bank? So I would probably say they're responsible for client growth as well. And can they show you the P&L by client or by type? Can we get that multi kind of dimensional view of what's going on? Show it to me from a client perspective. They're also probably looking at teams. So the team side of things is the wages. Who will be pegged for pay reviews or promotions in the year ahead? It's a big job to do this in advance in a year that we don't even really, not all of us can see a whole year down the track. But you know when people started, you know when their anniversary date is, if they're in probation, are they due a review? If they're not really doing so well in probation, are you going to extend it for another 3 months? And make sure you have the reviews. Manage expectations here. And finance can help behind the scenes to put in the figures, looking at the benchmark surveys that you get from salaries and also looking online to some of the other tools that are available to you. If we are going to increase, make sure your rates follow if that's the way you're billing your clients, because quite often what will happen is you'll increase through the year or your team, but we haven't changed our rates and we sign up more clients on the old rates. So you really need those to be automated together. The minute you in your budget increase your team costs, that it's updating your cost rate, which goes into your ERP system or your job management program, whether that's Harvest or Accountability or Paprika. And then your sell rate, is there still a buffer between cost and profit? Being on top of that. And then ATO. So I'm just saying compliance from an ATO perspective. So the sorts of things we'd look at here in finance, this is what we saw earlier for the CFO dashboard, but I've given you more rows because behind all of these, there's tabs galore showing me all the increases. I've also added in all the metrics. So how do you look at percentages? Your revenue as a percentage of billings, for example. What about resourcing as a percentage? These are all industry key metrics. This is just a fake example, but what are you doing over the years? I've kept it pretty much consistent just for the illustration. But by the time you lay in your own and see what's happening here, it helps point you to the area that needs the most attention. And then you can look to benchmarks. Not that we want to benchmark, but it gives you a clue as to whether you're ahead of the curve or you're lagging behind, and there's something we're just not doing right here. And then being able to analyze it and figure out how do we improve. That would be why you would do the detail. Compliance, so payroll tax, big one, as agencies are growing, and I'm working with quite a few at the moment who've just clicked over. So depending on what state you're in, you will need to start considering, just build it in. So put it into your budget under your payroll or resourcing tab. If our salary goes over New South Wales 100 a month, Victoria seems really low, and the others are all sitting up higher, then I need to potentially provide for payroll tax. Might go over not this month, not next month, but the next month, and then not, and then so it could be over a year. But just have it there so that you're not caught out and that you're aware, you're seeing it, you're on top of it. Superannuation increases on the 1st of July up to 11%. All your forecasts need to be updated. Most of us will probably be using MYOB or Xero to do payroll or another program. The salary will go through on the normal salary, whatever their salary is won't change. The super will just update itself to 11% usually, which changes the total package. So again, what's your process, finance? Do you have working with the HR department, or are you reissuing remuneration schedules to the team to let them know that we took the hit on that extra 0.5% of super, your package is now 0.5% more. So just being clarity around this, a bit of communication would be important. And Dear 7293, if you're also in that territory with owners taking drawings out and superannuation to the 27.5 before 30 June. Another area, if you're not on top of this, then go look it up, because this is something that perhaps your tax advisor should be already talking to you about. If not, call a meeting and just make sure that you're covered on all of these. So I guess as we kind of wrap up, and then I'd love to sort of go back to some of the topics I've touched on, what would it be that you'd like to do? I thought I'd just bring it all together on a single slide. Depending on the stakeholder, and there will be crossover as an indie agency, and some of you quite small boutique agencies, you're probably doing all three. You need to be responsible for growth. You're also obviously looking at performance, and you need to be compliant on everything. It's a hideous word, compliance, a bit like budget for me. Those words to me, I wish we had an alternative, but you just want to make sure that you're on top of it from a balance sheet perspective, your working capital, earnings per share, and valuation. If you build your Google Sheet or whatever program you're using, it's probably going to be in an Excel sheet of some sort. You can have this automatically calculating each time you lay in your new balance sheet for the month of July, August, September, or quarterly even, just so that it updates automatically. Always know. So if someone did tap you on the shoulder, you've got a figure in mind immediately. Or if you have a figure in mind, just run the figures through your actual finance program and see how far off you are. Is the rest intangible? So it could just be you need to get a reset on that or grow to a certain target that you're looking for. Balance sheet again, so looking at our client security, pipeline, and resourcing on performance. So if we've got WIP happening, if we're looking at long-term secured clients, if you were going to sale or just regardless of going to sale, your client contract is only as good as the termination period. If it's 30 days, they can pull the pin in 30 days. What really matters is the history with the client. How long have they been with you, and how likely are they likely to stay? So again, signing for 24 months or 48 months would be awesome if you could do that. And some of the businesses I work with offer that to a client, and we lock them into today's rate, and we've already pre-done the sums. It's possible. Resourcing, again, looking at your people and how you're educating them. Are they wedded to you? How long have they been with us? Debtors, super, tax, and more tax. So again, just being mindful of debtors. This is important from a compliance and an insurance perspective. So if they're not paying within their agreed terms, we might be at risk with our insurance. Be very on top of this, because I have seen, unfortunately, some agencies not do so well here when whip, close a job, hits the P&L, made a loss, actually the client hasn't paid either. So be really mindful of this. And again, have it on your dashboards every month if you're not already doing it. Profit and loss, probably the next area. Contribution margin, gross profit margin, net profit margin, year-on-year growth. These are, I guess, key metrics I'd be looking to see right now on where we are at the end of this year and where we're projecting for the year ahead. If we missed on any of these, which quite likely we did, where, who, which one? Show me the margins. What are the reviews doing? Where's the write-offs? What's going on here? Why didn't I hit it? Learn from that and set in some KPIs for going forward. WIP, as I mentioned, and accruals, and the profit margins. It's really interesting to see what they are, job by job, and then roll up to a client level. So some jobs might be terrible, but overall the client is healthy, or this client is not compared to this one. Why not? Could be the people, could be the client. So having a close look at that at this part of the year. I'd see this sort of thing being more, and the clients over here, pipeline, perhaps SWOT, that might be the annual SWOT meeting, strengths, opportunities, weakness, threats, but focus more on what you can control. It's nice to know what the threats might be, but focus on where you demonstrate value, which is where I look to next year and next level. So these are the extra ones, which I haven't really spoken about, but if you are entering awards, better be in the budget. When is that? Make sure you're ahead of the game. If you are doing that, I'm sure you know what to do after you secured an award, that you're doing all your PR and comms so that everybody else knows this is a successful agency and you want to come here because we can demonstrate to you we can do the work. So again, that might be a budget you didn't have last year to have a PR line in to make sure that socials and everything are harnessing and capitalizing on, winning some awards, whether that be people or work. Market share might be another thing from a growth perspective. So if we're in the automotive sector, how many car brands are there? Do we have one? Should we have one? Should we have two? Is there a conflict? So telcos, banks, you could be looking at market share. Toilet paper, where is your new business direction, or are you a specialist agency? If that is the case, you might be working with a mother brand, which has several sub-brands. So look at the brand architecture here to see if you can look and pitch for other clients in there. I use the word pitch lightly because I'm not a big fan of pitching. However, if you do, be very strategic and very smart about how you do it and how many you do pitch for. Risk as well here. What's the risk tolerance of the agency? The pie chart where we had a client that suddenly became 50%. In some cases, I'm working with agencies where it's actually 60% of our business now, revenue. That's a concern. So what are you doing to mitigate it? To find another client of that size, you might take 3 to 6 months, maybe a year. And in some cases, it's taken 2 years to secure another client that size. So what's the plan? How are you working on it? Efficiencies internally, that's your systems and your effectiveness, and really focusing. This would be your middle managers looking at that for you to make sure we're not spinning our wheels or faking our timesheets or doing work the client doesn't see value in. Average rates is another good one. Finance can help you with this, but middle managers can do it as well. This is where you look at what do we bill the client in revenue divided by the number of hours, and that's potentially what we got paid by hour. And that blows my mind on some clients because the ones that are high touch or draining, the average rates can be like so low, you've got to do something about it. So you've got to look at that and then strategize, work with your team. How will we change it up? Are we okay with that on a money sense? Because qualitatively, we get something else from this client. Maybe we have the opportunity to work on work that's pro bono or a charity or something we've chosen to work on to help. But average rate is a really good one to kind of balance the field. Benchmarking, we mentioned. Benchmark yourself. So benchmark where you were in a bumper year. What was a bumper year for your agency? And how are we against that today? What's different? Looking at all the margins and flags, and then look to the industry. So obviously we've come out of a couple of down years, but some agencies have done really well. So again, I've been looking at the internal and external benchmarking. Salary packaging, something from Singapore. And if you read any or watch any of the videos, which I think they're all up on YouTube now, so the Network One, the Indie Summit, there was an amazing pitch that from an agency in Hong Kong who completely flipped the salary packaging conversation. And in a job market that we're in, talent market is tight. This is a space that I'm spending a bit of time in at the moment where it's a pick list. As we would present to client, these are all the things we do. This is your brief. We've responded to brief, but we'd like to suggest you this, this, and this as well. What would you like? The salary packaging is the same. This is how much we'll pay you. These are all the things we offer. What would you like? So whilst it might make it a bit challenging for finance to run it that way, from a cultural perspective and an individual's perspective, it's very pioneering and quite different. And it is what we all know. It's changed from 20, 30 years ago when I started work, where I was just so loyal to my boss. Now they are not so loyal and they want more. So how can we change the way we have been doing the salary packaging? So that would be something next level to look at. And next year. So diversification, what are non-negotiables as well? So if there's stuff that you will not accept again based on this year's results, next year this is not negotiable. We must nail it. We must, whatever it is for you. The tools that you're using, the professional development, the training and education to your team and their KPIs that they will hit if you give them the right tools and the training. Without that, it's hard for you to set KPIs because you might not have a management program that they can all see clearly and be responsible for running their own KPIs rather than you telling them. Make them do it the other way. Again, that's the flip. So you don't have to do the work. Finance doesn't have to do the work. Build the program for them so they do the work and they can see it before you even see it, and they'll respond quicker. Key metrics, rolling forecasts and reporting up. So that flipping it, reporting up to management for me is key. So try and move it that way where they're all fully seeing what's going on with their portfolio, what they can control. Makes it a lot easier for the business owner when you allow that to revenue line with the targets, productivity, and rolling forecast. If you don't hit it this month, the impact is over a year to date. So do some cumulatives, target for the year, and when you don't hit it, what it means as, you know, how far behind are we going here, and what are you doing to help close the gap? So at the end, I guess, focus on what each of the stakeholders in the business need. What are the key drivers here to help you achieve your targets that you're all aligned to? And then as a C2A, as a call to action, keep it simple. Just pick a few things that I'm sure a lot of you will be doing most of what I said, but there will be certainly something in the presentation that you're probably thinking, what was that? I don't think we're doing that. Or, oh, I forgot about that 11% super, which a lot of agencies have. Because they don't have HR. So just now you've got a few things on your notepad to get on and action. So any questions, I'd be welcome to take them. If it comes to you later as well, anytime, it'd be really great just to have a chat and see how I can help. And that is the end of my end of year financial health check. Back to you, Sam.
Fantastic. There's a lot there to consume and
A
lot. So guys, if there are no questions, what we'll do is we will share this around and also put you in contact of Kathryn so you can ask questions directly to her. So thank you so much for your time. Really, really interesting stuff. Thank you, members, for tuning in. I hope you found it valuable. We'll circulate a copy of this once it's all cut up. And thank you, guys. Have a great day and enjoy the short week. Kathryn, thank you again.
Thanks a lot. Bye.